Welcome back. In this lecture, we will discuss about the smart money trading, that how actually you can use the smart money concept to take trades that almost will be 100% confirmed trade with very high risk to reward ratio. Basically, let's say that the market is moving something like this, and then you see the market moves down and suddenly you see that the market gets a huge pump. This is where you will see very large green candles after a move towards the downside, and you will suddenly see that the market volume has increased a lot. This is where you can actually understand, or you can assume, that the smart money has been involved, because retail traders cannot make such huge moves because it's $1 billion move in the market. So whenever the market moves, you will see something like this, that the market goes up, then the market comes down to fill up all this area, then market makes its next move, then comes down, fills up all this area, then market moves up, come down and fill all this area. But sometimes what you will see that the market has taken a huge upside push and it never came back, and then you see another push, and then you see another push. Now these are called areas of inefficiency, or you can say that these areas have to be filled. The market have to come down to fill up these areas because they have bought there. So because the buying pressure was huge, they never came back to close their positions. So they will definitely come back and close their positions here. So these are the areas where we keep an eye and we wait very patiently here in these areas where the market is supposed to come down, so that we can actually take an entry. So let's assume this as an example. So let's say the market went up, right? Then came down, and from here we saw a huge push towards the upside. So now what you can expect is that at any moment here, what will happen is that the market will take a dip down to fill up their position. So if you see this area is vacant. They never came back to fill up this area. So I will just turn this, let's just decrease the opacity. So this is the area where they never came back. So what is the ideal situation? They should come back here, fill up this area of imbalance, then move up again, and then if there is area of imbalance, they should fill up. In normal situation, this is how the market moves. But you see here, this is the gap. We call it the fair value gap, or simply you can call it imbalance. So I will just write it here, imbalance. So this imbalance needs to be filled. Similarly, if you see here, the market went up, but again, never filled up all this area, leaving this again a gap that we can call as imbalance. So this again is an imbalance area. If you see up here again, between this wick and this wick, you see this area that there is no selling candle here. So again, this area is vacant. You can call this imbalance. So these all areas are imbalance areas. Now these areas need to be filled. The price will take a shift, the market structure will change, and what they will do, they will come back and fill up these areas of imbalance, and after this they will take out any liquidity or stop losses as we discussed in the previous lecture, and then you can expect the market will move up. So always market comes towards the areas of imbalances, and that's where we wait patiently to actually fill up our orders as well, because we follow the footsteps of the smart money. So if you see BTC here, I will just move towards the daily chart. So this is BTC, and let's just try to understand that how we can actually see the imbalance areas and how the market will actually come back and fill those areas. So if you see here, the very first candle, the market came down, filled up, came back up, then the market went up but never came down. So we see here the area of imbalance that was not filled. So I will just mark it here, and let's just turn this into white. So this area that is in this box, this definitely is an imbalance area, and the price must come back to fill up this imbalance. Let's play the price and let's see what the market does next. So as we can see, they came back down. This wick shows that the price came down but never filled up completely. So I will just move it to the area where the imbalance is remaining. Let's move forward. Price again went up, and let's just move our box here just to see the imbalance. So between this wick and this wick, you can see here this area is still an imbalance area. The price went up but never came back. So as you can see, we are moving up and we are leaving behind imbalance areas. Now let's move forward and let's see. So here, as you can see, the price came back down, filled up this imbalance but not completely, so we'll just move it to the area that is still remaining. Let's play the price. So we still have, price came down, but this area is still an imbalance area. So there you go. They filled up this imbalance. So I will just now start deleting it. So this area is not valid anymore because it was filled. So let's just delete it. But on the other side, now they are leaving the imbalance. You see the price came down but did not fill up, means this and this area is not filled. So I will just turn this to red. The border is red, so we can differentiate between the buying side imbalance and selling side imbalance. Let's play the price. The price came back up to fill up this imbalance but did not fill it completely, so we'll just move it here. Still this area of imbalance is remaining. As you can see, the price came down but did not fill up completely, so this area of imbalance is still there. Let's play the price. As we can see now, this imbalance area that was left behind, this was filled partially again, so we'll just move this down so that this area is still remaining, although partially it was filled. Let's play the price and see where it goes. Now as you can see, just zoom in and we can see that this was filled further. So I'll just move the price down a little bit, this box, so but still this is remaining, and the price went back up. Let's just play again. So we see this price came down. As you can see, this area is now almost filled, right? The price came down, filled this area. A little bit of imbalance remaining here at the bottom, but that's negligible. I will just delete it. Now here at the top, if you see, this was imbalance left, but this green candle, as you can see, has filled this imbalance. So we will just, so this imbalance area is not valid anymore, so we'll just delete it. So now we are left with these imbalances here at the bottom. At the top, everything is clear. Let's play the price. Now price went up. As you can see, the price went up, came back down. So this all area is filled. Let's play the price again. And we don't see, the price went up, came back, filling all the imbalance. So we don't see any imbalance here. Price came down, went up again. Let's play it and see the next candle. As you can see, went up, came back, filling all the imbalance areas. We don't see any, vacant or imbalance areas between wick to wick. So everything was filled. Let's play the price again. There you go, price came down, leaving some imbalance, but let's play the next candle to see if this was filled. Yes, it was filled, and the price abruptly moved up higher, came back down. As you can see, now they are filling up the imbalances, not leaving any imbalance. Price went up, came back down, wick to wick, everything is filled. So we keep playing the price until we see an imbalance. So here, as you can see, the price went up, never came back. So this week and this week, leaving an area that is an imbalance area. And here also we see an imbalance area between this week and this week. This area is an imbalance area, right? Okay, now this imbalance was partially filled. Let's play and see if it was filled more. Yes, this was, as you can see, the price filled it completely. You can see it here. This complete box was filled and the price came down, then moved back higher. So we'll just delete this area as this was filled. The price came down, went up. So we'll just keep playing until we see some imbalance. As you can see, they are filling the imbalances very quickly here. We don't see any imbalance here. The price went up, came back down, wick to wick. We don't see any imbalance. So here we see a little bit of imbalance, but let's see what price will do. There you go. The price dropped down, came back down, filled this imbalance, right? I'll just delete it, and also filled this partially. So I will just move this area to this end of this wick. So this is still remaining. Now what you see on the top, an imbalance on the sell side. So I will just put this block here. As you can see, the price never went back. So this imbalance is on the sell side now. So what you should expect is that the price should fill this up if they want to drop the price further down. So let's just play and see what happens. So they never filled that. Let's just see. There you go. They filled it partially, dropped it. So we have this imbalance has been filled. Also this imbalance, we can of course now change it and move it to this level, right? Because the other part was filled. So we have only this imbalance remaining here, this part of this red candle. Also on the sell side, now you see further imbalances. You see here is the imbalance, and you see some imbalance here on the downside. So we have this imbalance, and this is how the price will keep moving. They will keep filling the areas and they will leave some areas behind, right? Now if you see, this all has been filled, so I will just delete this. But as this has been filled, what happened was that they left some imbalance areas here. So if you see this week and this week, they left imbalance areas on the buying side. But what I'm trying to say is that these imbalances are still there. The price is moving up, but these imbalances areas are still remaining. Now, if you want to take a trade based on the imbalance, I know one thing for sure, that these imbalances need to be filled, as well as these imbalances here as well. So I know that the price must come down. The price has to come down to fill up these imbalance areas sooner or later. Now, also I can see here that there is this equal lows that the retail traders think as a resistance. So there definitely is liquidity resting below. So that makes it more stronger that these imbalance areas also need to be filled. Plus this liquidity is there. So price can come down. The price must come down to fill up these areas, but the price can also come down to take out these lows, so that the stop losses of these retail traders can be taken. They fill their bags because these are all sell stop losses here. So these areas will be taken, and then you can expect the price to move up. So we have a couple of reasons for the price to come down. One reason, that the imbalances are there that needs to be filled. Second reason, there is huge amount of liquidity resting here. So as you can see, the price kept pumping and leaving some imbalance areas. We don't see here a lot, but there is a little bit here. But then you will see that the price will definitely come back to fill up the areas, the imbalances that the price left behind. So here, if you see, the price came down, filled up the imbalances. As you can see, with one shot, what they did, they filled up all these imbalances. So I will just delete this. This was done, this was filled, this was filled, and this was filled. Now, those people who saw that the price is pumping and they don't have an idea of smart money, what they would do, they would draw some trend line. We discussed this in the previous lecture also, that they will start drawing some trend line and they will see that the price is trying to hold that. But actually what the price wants is, they will not only take out those stop losses, but also they are filling their imbalance areas. So now what we have here is that we still have these imbalances remaining down here. And as you can see, the price is dumping down really hard. Now this is the latest price action. This is where BTC is right now, $41,854. But as you can see, they are getting closer and closer to the areas of imbalance that they left behind. But also we see here that they are leaving some imbalances here. So what I see here, there is a big imbalance area that was intentionally left behind, and they will definitely come back and fill that. So that imbalance on the selling side is still there. So I will just turn it into red. Also, we can see here that there is an area of imbalance that was not filled. So this week to week, right? What we can expect, or what I am expecting, is that the price here is creating some equal lows, and this is again very intentional. They are creating these equal lows, and those retail traders who think that this is a sport, they will long the market from here. But what price actually will do, they will actually go back up, fill up these imbalances that they have left behind to this point, maybe somewhere, and then they will again come back, hunt these stop losses, fill up their imbalance areas here, hunt this liquidity, and then move up and fill up the remaining imbalance areas as well. So what they are doing is they are hunting the stop losses, they are filling their imbalance areas, and that's how they keep the market moving. So first of all, how we will like to trade it. The way we trade is that we search for the order blocks. Now, what order block is? Order block is the last down candle before the move towards the upside, or last up candle before the market moved towards the downside. Now, what do I mean by this? For example, let's say that this is the market move that we are looking at right now. Now, if I delete these, because this is understood that this is the imbalance area that is left behind, and now we have a good understanding of this, that why I drew these areas. Now let's see here, what was the last down candle before a strong push towards the upside? It's this red candle, right? So I will just draw it here, this red candle. So I will just note down this candle, just turn this into, let's say, green. So this was the last down candle before a strong push towards the upside. Now there are a couple of things that we need to keep in mind. Number one, that the market, after that order block, I'm calling this the order block, the last down candle before the market pumped or pushed towards the upside. So this order block should contain some characteristics. First characteristic is that the order block must contain some area of imbalance immediately after that. That means that after the order block was created, it must have some imbalance area. So as you can see here, there definitely is an imbalance area, right? So if you see between this and this wick, this area is imbalance area. So I will just turn it into white. So first thing, this is the last down candle before the strong push towards the upside. Second, it does contain some imbalance area immediately after the order block. And the third rule that you need to keep in mind is that push towards the upside, for example, in this case, has it broken any structure? So what does structure break mean? Structure break, we discussed this while we were taking a sample trade also, if you remember, but I'll just repeat it here. Structural break is that, let's say the market went up, came down, went up, came down, went up, came down. So this, let's say the market does this. Now this is the structural break. The market was creating higher highs and higher lows, but suddenly the market broke the structure, right? It came down lower. Similarly, if the market is going down, something like this, and then you see a strong push towards the upside, so this broke the structure. So when the structure is broken, that is what we are looking for here in the order block. So as you can see here in this example, the market was going up, it came down, and after this order block, it pushed up and it broke this structure, right? So this structure was broken. The market created a new high. So these are the rules that we see in an order block, and these are very easy to spot. Number one, the last down candle before the strong push towards the upside. Second, there should be an area of imbalance right after or immediately after the order block. And thirdly, we'd see that has it broken any structure or not. So as the market is leaving imbalances already, where we can expect that the price would come, well, this is the area, this box. So you can expect that the price will come down, first filling up all the imbalance areas, plus it will come down into this area, and this is where we can expect a rejection towards the upside. And same rule, when the market is moving towards the upside, the opposite direction, you will see the same rule. But in that case, what will happen if I just turn this, and let's just turn the green into red. So when the market is moving in the opposite direction, let's say this came lower, then went higher, then came lower, and we see these imbalance areas here. So we now expect that the price has to go back up to fill up these imbalance areas that were left behind. So where we can expect the price to come? Well, in this case, it will be the last up candle before the down move. So it will be the last up candle before the market moved down. So this is the area where we can expect that the price would come, touch it or partially fill it, and then drop back down. So we'll place our sell orders here, expecting that the price will come back here, fill up this. So we can see here that the price will come down, and then you can see a further drop. So we'll put here our sell order in this case. So as you can see here, the price is moving up, then the market came down, and then you see this strong push towards the upside. And when we see this strong push towards the upside, what we see here, we see here a very nice red candle. And let's try to understand that does it fill our rules also? And what are our rules? We discussed. First thing, last down candle before a strong push towards the upside, right? So this is the first rule. Second rule, this has an imbalance area or not? Well, it definitely has a huge imbalance resting right here. And rule number 3, has this move broken any structure? And as you can see, the price went up, came back down, went up, broke this structure. So yes, it has broken the structure. So all our rules have been satisfied. And this white area is the order block, the last down candle before a strong push towards the upside. So I will just call it OB, or order block. The price will come down most expectedly, and it will fill up this imbalance areas, and from this order block the price should move higher, or should at least pull back, and we should be able to take a trade and get some handsome amount of profit. So let's just move down towards the lower time frames. We have these areas marked, right? So these are the areas that are marked. We have this imbalance, and below this, let's turn this into, let's say, yellow. So this yellow area is the order block where we are expecting that the price should bounce back and we should take a trade. So let's just play the price. There you go. So price came down, not only filled the imbalance, but from which area the price bounced back? Just look closely, the yellow area. And how much was this bounce? Let's just calculate it. Well, this was 15% bounce. So if you would have placed your buy order here, that was a 15% pump towards the upside. And how much time it took? Let's just calculate. So let's just see, from this to this, it took 3 bars, so approximately 45 minutes. So 15% move within 45 minutes. That's the power of order block. Now let me give you some more examples. Let's move to Solana. And as you can see that Solana went up higher, leaving some areas of imbalances, right? We have some imbalance down here. We have this order block, the last down or red candle before the strong push towards the upside. We have imbalance immediately after that. Do we see here something? Well, we don't have it here, maybe on the lower time frame, but this order block is very clear. The red candle is very clear before the price moved towards the upside, breaking this structure, of course. So this structure was broken and the price moved higher. Now if you move up, we see some areas of imbalance. So I will just draw those down. So this is the imbalance. Now these are the imbalances that are still remaining. Plus, if you see here, the price is moving higher, but this down move before the strong push towards the upside, leaving some imbalance. Why I have not chosen this red candle? Because there was no imbalance after that. The price filled the imbalance. But why I have chosen this area? because this is the last down candle, red candle, before the price moved up and broke the structure, right? You can see many higher highs were broken. Even this structure was broken at the top. You see this wick. And what are the rules, other rules? Well, is there any imbalance area? Well, yes, after this red candle we see this area of imbalance that was not filled. The price broke the structure after leaving this area, and this is the last down candle before the strong push towards the upside. So we expect that the price should come down, not only filling the imbalance, but also the price should take impact from this red candle so that we can take a trade and do a scalp or maybe a swing trade. So let's see how the price moves. So as you can see here, the price filled up the imbalance area, that was this white, and what happened next was that from which area the price bounced back? From the green that we actually drew here. So this green, this last order block, and as you can see this wick, the price came into this area and then pulled back. And how much was this pullback? It was 20%. If you move down to the lower time frames, you will see this huge move towards the upside after the price touched into this green area. So this was 20% move towards the upside. And let me just check it again. So from this point to this point, it was 20% move in 15 hours, 26% in fact. So this was an easy trade. And this happens all the time. Let's take an example of sand, for example. Now if you see sand was pumping, right? And we are trying to find some order blocks. Now we see this order block, the last candle before the strong push towards the upside, that broke the structure as well. So we'll just highlight it. So let's just highlight this last down candle before a strong push towards the upside. So let's just turn this to green as well so that the order block areas remain same. And also we see this last down candle before the strong push towards the upside that broke the structure, right? So this structure was broken. So we see this, and also there is this red candle, but as this was filled, the price came back down and almost filled it. So we're not considering this an order block now, because our rule says that there should be an area of imbalance. So as you can see, we do have area of imbalance here, and we do have an area of imbalance immediately after this order block as well. So we are expecting the price to come down, fill up this imbalance area and react off this order block so we can take a trade. And later, based on the price action, we will see if the price comes down to fill up this imbalance area, react off this order block, and we can take the trade. So let's see how the price reacts. So let me just play this. We are waiting very patiently for the price to come down to our area. This is where the order was. So if you see, the price filled up the imbalance area, reacted off this order block, right? As you can see this wick, I will just delete this red line. So you can see the wick, the price came to this order block and then moved higher. So if I move towards the lower time frame, so as you can see how strong this push was. So if your order was placed here, this was again approximately 44% push in within 12 hours. So a huge profit. So what you can expect next is what we see this week. This all happened because of this order block. So they filled up the imbalance and the price went back up. But now what I am expecting is that because we have imbalances down here, so what I expect is that the price will take another move towards the downside, filling up this imbalance as well. So that again is something for the future. Let's see Mana. So Mana again pumped very hard, and as you can see, we have a couple of areas of interest. One is this down candle before a strong push towards the upside. So we highlight this, highlight the area of imbalance as well, this wick to this wick. This is the order block, this is the imbalance, And if you see here, this is the last down candle before the strong push towards the upside that broke the structure. So this is the order block here. And let's display the price. As you can see, the price came into this order block. And how much was the pump? The pullback was approximately 46%. And what you can expect next, because this is huge area of imbalance, you can expect the price to just come down, fill up this imbalance partially or fully, react off this order block, and then move towards the upside. So I hope this makes sense. Now in next video, that will be the last video on the smart money concept, I will tell you actually how you can take actually a very confirmed trade based on the smart money concept and combining it with the Elliot wave. So let's move on.